Hello viewers, welcome to my channel Sensor 360 Investor, where we leverage best practices from the business world around the globe and apply that to the investing process. Investing has many different facets. Here we incorporate a 360 view framework to help create, grow, manage wealth. In this video, we will focus on indexes, and today we'll cover indexes related to markets. We'll look at the sectors and where the ETF leadership is, and then we'll close out with looking at the index models and what they're telling us. Before we begin, quick word about the disclaimer. Please do read this. Essentially, I'm not providing financial advice. Okay, without further ado, let's start with the show. So here we have a US market overview, and we can see that we've had an uptick in bounce in most of the indices. The Dow Jones Industrial came up, and we saw that little bounce in the NASDAQ, in the Wilshire and the benchmark S&P 500. But this is really as a result of the pullback I noted in the markets review of the weekend, that this was getting climactic, and indeed we have got a pullback, and that pullback looks very similar to this one here. So it looks like if it does find support, then the yields should start to move back up, which will then in turn bring the indexes down again. The dollar was exceptionally strong, and we saw the dollar also been coming in over the last few days as there's been some weakness showing up in currencies around the world. No movement in gold. The fear index has been pulling in, so people are still stepping up, thinking all these markets are the bottom. And I spoke about some naming the bottom strategies in the markets video. And then we have just a quick note on the NASDAQ. So the NASDAQ had started to move up. It is earnings season, and the big tape painters are busy reporting right now. And we saw yesterday's reports were very bad and had a negative impact on today's results. Some of the big tech reports from today are exceptionally bad, and so they're large enough to be able to move this index. So wouldn't be surprised if this finds its way down to support at the 200, and then that'll be a good testing area to see, and we'll see what it does from there. Okay, a quick look at the broad sectors in the S&P 500. So this is a 3-month view, and we can see clearly energy, sole star still. And then here we have some key US markets. Same kind of story, nothing really different here. So we'll skip this, already covered it. And then back to the S&P sectors, and this is a 1-week change. In the 1-week change, we can see that some money has come into healthcare. So these could be tied to earnings moves from companies. Materials was up for the week, energy still up. So all the action is still kind of defensive, and we can see communication services down quite a bit. It's the 1 week, and the 1 month view, we get a slightly cleaner look, and clearly energy is tells us where that's the place to be. And over the 3-month view, Soul Star, and even over the past year, or 6 months, sorry, this is the 6-month view, we can see still energy. So energy, it's all energy. And if we look at the past year, so looking back over kind of the calendar year, we can see that if you had mostly or some of your money invested in energy, you would be doing exceptionally well. And these are pretty good returns as well. 18% in staples, and 16, almost 17% in healthcare, and utilities almost 16%. Very defensive look still, with just one area of the market which is really providing some upward movement, and then it's all the safety plays here. Okay, and if we this is a different look at the same sectors, and we can see, you know, the top two, energy still rampant and jumping higher, as is healthcare, and the rest are just like, you know, utilities is in a little bit of a downtrend, real estate is now an established downtrend as well. So not a lot of positive action going on here across the broader markets. And that brings us to our models. And given where we are with market action, so we remain defensive ourselves. And so the 401k model is saying stay cash, and both the long-term investing models are also indicating cash. So that's where we stay. Okay, so in this video, we looked at the indexes and specifically covered updates and looked at the US markets, etc. Please do read the disclaimer. Give you a few seconds before we begin to close out. Okay, so that wraps it up for this video. And thank you for watching and listening. I'll see you on the next video. Until then, goodbye.